All right, let's look up SNDL.
Oh, geez.
Uh, that's still killing me right now.
We're all feeling it, right?
I might
Man, you
end up
look at that.
willing it to my kids because at this point I'm too emotional to let it go.
Oh no, yeah, this is definitely a psychological and emotional game. That's most definitely true. Most
You
definitely
got to
true.
go candle, bro. Wow.
It's
Ugh.
big. It's big. I
No
mean,
more.
if y'all bought on the pullback here, I mean, this would really have been the confirmation to get in the trade. But I'm a little bit of an aggressive. I'm more aggressive than I let out to be. You know what I mean? So I got in right here just because it was kissing this moving average. But let's talk about a little bit of why I would have gotten out of this trade. So when you these moving averages, these are really cool because you can actually use them to tell you what the trend is. You know what I mean? So when the stock is going up, these trend lines are basically confirming that for you. And what I
And
like is like when price is kind of kissing it and just riding it real closely, that I know the trend is still going on. But when they cross, like you see here, that's kind of a signal like, hey, this is moving pretty quick. This is the fastest moving average right here. It's a 8-day moving average.
I was just about to ask you, what do you use? What date or time frame? Like eight,
Yeah,
250?
yeah, absolutely. So the ones that I use the 8-day exponential moving average, and I like
Okay.
that one because it kisses basically price action. And then
Okay.
I use a 20, and 20 is kind of a sweet spot. So let's say price kind of pulls back to the 20 here. It's a pretty deep retracement, so that tells me I'm getting a good discount on the price. But when I use the 8, it kind of indicates that the trend is really strong. So let's say the price went up, came back down, pulled back, retraced, and then it kissed this 8-day fast moving average. We got a bullish day there. So I was like, oh, so I can basically enter this trade. So sometimes it'll retrace deeper to the 20, but if it's moving along the 8 just fine, I could still enter the trade. It's just confirming my bullish bias, basically. So I tell everybody, use your moving averages. It's going to help you identify the trend. When you don't have them on there, it's kind of hard to look at a stock chart and just be like, okay, what are higher highs and what are higher lows? Well, you can kind of simplify that by just looking at these lines. Like if you know a direction is up, then hey, the trend is up. I can be bullish on this. I can buy it and then just see what happens with it. But basically going back to why I got out of the trade, not only did I see momentum, these candlesticks were getting pretty large here. You see how here at the top, your candlesticks, this is the uptrend. The candlesticks get kind of small. And there's really only two type of candlesticks. There's big candlesticks and small candlesticks, and they can show you where the momentum is. So it's kind of signaling, hey, like these candlesticks are getting kind of small, and then something weird happened. Maybe the market makers were kind of sucking buyers in so they can drive the price a little bit higher, so they can sell it higher. And then look, we got a big red candlestick, bigger, then bigger and bigger. And then finally you get smaller ones to kind of show you that, like, this would signal you that price isn't really going to reverse. Like sometimes new traders will get happy. They're like, oh, okay, we got a bounce right here. But look at the candlesticks, they're small. Okay. And then
There's
what
no
happened?
momentum, right?
Yeah, there's no momentum in the upside.
That makes sense.
Yeah. And then we got a big red candlestick, more momentum.
I was gonna
Small.
ask you a question. I don't want you to get too far ahead, but with the moving averages, like looking back on the chart on the left, would you say that the bigger the gap is between the moving averages, the stronger the momentum or the trend?
Absolutely. Absolutely.
Yeah. Okay.
Yeah. And then sometimes things can get a little too parabolic while like where the moving averages are widening really, really big. That can tell you like, hey, maybe I shouldn't chase this. You know what I mean? Because it's already on a
Hmm.
big, huge run up. If you're already in the
Oh,
trade and you got it in, the pullback, like when we were calling it back here, when it came back and touched this green moving average, I think we put it on the hot list like back here, and it made it
right.
made it again like back here. So I mean, if you got it in early, great. But if it's already parabolic and making a huge run up, this is going to happen 99.9% of the time. I can almost guarantee you. Just go back up the charts on any stock that you like, and just kind of study what has happened every time price has made a big run up. people get happy, day traders start taking profits, and it's going to go down the next day for sure.